Diddy's freedom now hangs on a single date, October 3rd. We'll map sentencing mechanics, realistic versus worst-case outcomes, hidden financial and brand penalties, narrative warfare in court, invisible post-verdict sanctions, comeback pathways, and a three-scenario action matrix. The most unexpected revelation? The invisible penalties often outlast any prison term. Picture an invisible hourglass flipped in the middle of a dim studio. Each grain that falls erodes legal budget flexibility, weakens bargaining leverage, and shrinks the window to reframe public narrative. Countdown economics is brutal. In the run-up to sentencing, attorney coordination, expert assessments, and image management stack into a negative return holding pattern. Time becomes a cash burn accelerator because every postponed sponsorship or licensing payment is foregone working capital. That is why savvy defenses fill perception gaps with controlled micro-disclosures instead of silence. A late message empowers the rival storyline. The micro-strategy. Slice remaining days into daily micro-goals. De-risk one variable per day. Compliance documentation, mitigation letters, restitution optics, rehabilitation proof. When time is gone, leverage is gone. Speed is strategy. Today, draft an hour-by-hour mini roadmap. Many viewers assume a judge just feels a number, yet the process is a structured lattice. Offense profile, behavioral history, victim impact, remorse signals, cooperation level, and public trust weighting interlock like coefficients. Guidelines aren't a ceiling, they're a negotiable elastic band. Aggravators, pattern evidence, power asymmetry, perceived recidivism risk, push the baseline upward. The mitigation bundle, early responsibility language, program participation, independent psych evaluation, documented philanthropy, drags it downward. That's why character letters are data points, not sentimental pleas. Defense teams frame narrative not only around past intent, but future low risk. Key takeaway: estimating sentence length means listing and scoring structured factors, not vibing on headlines. Build a factor matrix: severity, role, impact, mitigation depth, restitution posture, rehabilitation trajectory. Score, adjust, scenario test. Structured analysis wins. Create your 6-factor draft tonight. What persuades a sentencing judge more? A spreadsheet of risk metrics or a human arc of remorse and controlled rehabilitation? The prosecution frames a forward danger story, emphasizing pattern, power leverage, and community signal, so that any leniency appears societally costly. Defense reframes trajectory: structured therapy, compliance logs, verified restitution pathways, and future supervision safeguards. Narrative friction concentrates on predictive framing. Is recidivism risk credible and low, or uncertain and latent? Media noise can infiltrate judicial perception indirectly, not by bias, but by shaping which factors feel publicly scrutinized. Smart defense teams preempt prosecutorial metaphors, pattern, ecosystem, network, with data-anchored counter-metaphors, isolated lapse, contained vector, de-risked environment. Craft matters because language compresses complexity into memorable judicial heuristics. Precision storytelling is risk engineering. Action step: list the prosecution's likely 3 macro metaphors, then script concise, evidence-backed neutralizers for each before sentencing memo deadlines. Win the framing layer. Think of mitigation as assembling a diversified credibility portfolio. Behavioral change proof, restitution intent, psychological stability, community integration, and forward compliance scaffolding. Each artifact, program certificates, therapist letters, verified volunteer logs, structured substance or conduct monitoring, lowers perceived future harm probability. Sequence matters. Proactive submission beats last-minute data dumps that look tactical. The defense teams often bundle a rehabilitation timeline chart showing initiation date, frequency, third-party validation, measurable progress indicators, and projected continuation under supervision. Quantify effort: 32 sessions completed, weekly monitoring reports, instead of vague growth language. Humanize without veering sentimental, concise, fact-pattern narratives illustrating insight into harm mechanics and prevention behaviors. Avoid overloading with redundant praise letters. Curate heterogeneous voices: clinical, community, business governance. Credibility compounds with coherence. Build layered proof. Punchline: documentation beats adjectives. Your takeaway: draft a 1-page mitigation matrix with columns: asset, evidence, validator, risk reduced, continuation plan, audit for gaps, Schedule acquisition tasks backward from filing deadlines this week. Two realities coexist: the statutory maximum headline and the guideline-adjusted probability band. Public discourse clings to the largest number. Strategic actors model median clusters. Worst-case frames negotiation psychology, showing downside risk if mitigation collapses. Most likely emerges after adjusting for role specificity, lack/presence of prior convictions, restitution posture, cooperation, and demonstrable therapy adherence. Visualizing both prevents anchor distortion. Defense charts often display a range, e.g., upper bound/via median, with probability densities, then tie each mitigation artifact to downward movement deltas. Communicate uncertainty responsibly. Overpromising erodes credibility if the bench cites aggravators you downplayed. Internally scenario plan, supervision terms, curfews, program continuation, or alternative sanctions that convert partial custody into structured community control segments. Dual modeling clarifies leverage. Reality has gradients. Action. Build a 3-column sheet. Scenario, conditions triggering, strategic response. So adjustments are rehearsed, not improvised. Prepare adaptive scripts. Imagine overnight repricing spreadsheets. Analysts slashing royalty forward projections, bankers retiering covenant risk, and insurers flagging moral hazard riders. Liquidity stress isn't always immediate collapse. It's progressive friction. Delayed receivables, renegotiated advance tranches, accelerated audit clauses. Catalog valuation models incorporate discount rates for publicity volatility. Heightened legal uncertainty widens discount spreads, shrinking present value even if streams hold briefly. Opportunity cost spikes. Shelved joint ventures, paused licensing expansions, frozen brand collaborations, awaiting reputational clarity. Cash is optionality fuel. Erosion reduces strategic pivot capacity. Proactive treasury tactics, cost freeze tiers, non-core asset divestment, selective royalty securitization, staggered payment renegotiation, slow bleeding. Quiet contingency credit lines matter more than public bravado statements. Financial defense is narrative defense. Action. Map a rolling 90-day liquidity runway with stress multipliers, base, delay, shock, and define trigger thresholds for each preemptive measure. Build an early warning dashboard now. Partnership decay rarely detonates instantly. It decays in phases. Monitor, quiet distancing, formal exit. The surprising part? The silent latency phase can mask compounding damage because activation pauses aren't public yet. Sponsoring brands run internal reputational VAR models, tracking sentiment velocity, influencer echo amplification, and regulatory chatter. Once thresholds trip, high, sustained negative share of voice, 60% for 2 weeks. Internal risk committees greenlight termination clauses. Meanwhile, algorithms may depress organic surfacing, reducing soft discovery metrics before any public split. Crisis communication windows are narrow. Early transparent acknowledgement plus concrete remediation steps can freeze attrition. Over-defensiveness accelerates skepticism loops. Manage trust, decay, half-life. Act fast or drift. Your action step. Audit existing partnership agreements for morality clause language, map counterparty renewal dates, and pre-draft tiered update scripts. Reassure, reinforce action, report progress. To deploy based on sentiment inflection points. Preemption preserves residual equity. Watch for a subtle rights arbitrage wave. Rival labels and funds probing catalog holders with opportunistic term sheet feelers, while uncertainty discounts linger. Talent scouts quietly escalate outreach to secondary collaborators, engineers, producers, mid-tier writers, because peripheral ecosystem defection precedes marquee defections. Streaming playlist editors may rebalance genre slots if predictive risk models flag sustained controversy, drag on completion rates. Meanwhile, independent distributors pitch stability, promising frictionless onboarding and brand insulation. Strategic competitors weaponize speed to reassure versus speed to poach. Expect rumor-seeded whispers designed to erode internal morale and accelerate negotiation fatigue. Defensive posture. Reinforce retention through transparent roadmap briefings, interim royalty protections, and option sweeteners tied to post-sentencing clarity. Preempt fear arbitrage. Get ahead or lose ground. Action. Compile a ranked list of top 25 at-risk collaborators based on outside inbound signals, contract expiry, and indispensability. Assign individualized retention touchpoints this week and monitor reply latency as a risk indicator. Build poach shields now. If this deep dive is bringing you value, tap like. Next, we expose the invisible sentences that outlast any formal punishment. The harshest penalties may never appear on a court transcript. You're risking emails from banks tightening compliance reviews, premium uplifts, or quiet non-renewals from insurers, merchant processors escalating reserve requirements. These soft embargoes constrict transactional velocity. Capital friction becomes a shadow sentence. Relationship managers interpret headline volatility through internal AML, reputational, and sanctions scoring dashboards. Once a threshold trips, lending discretion narrows, even without formal breach. Insurance underwriters recut exclusions, raising self-insured exposure. Silent tightening compounds. Liquidity optionality shrinks. Soft embargoes bite. Counter strategy blends proactive transparency packets, audit summaries, compliance certifications, and diversified banking stack design to avoid single choke points. Neglecting early dialogue allows risk assumptions to crystallize unchallenged. Action: inventory all financial counterparties, score each on dependency and substitutability, then initiate structured update calls offering standardized compliance briefs before they request them. Preempt perceived opacity, maintain flow. Two drains run simultaneously, escalating direct defense spend and compounding foregone deal flow. Monthly attorney plus specialist invoices scale with motion complexity. Simultaneously, cautious partners defer contract signatures, converting pipeline probability into near zero. Without revenue offsets, legal burn converts retained earnings into runway shrink. Opportunity cost is an invisible multiplier. Missed launches, paused sync placements, postponed licensing renegotiations that would have repriced catalog assets higher in calmer markets. Cash velocity slows. Strategic flexibility narrows. A disciplined cost triage stack ranks expenditures, mandatory, core defense, impact lever, mitigation optics, deferrable, non-critical expansion, cut, vanity PR. Scenario modeling should integrate probability of closure decay curves for pending deals after each adverse headline cluster. Treat silence as a risk metric. Capital discipline is survival leverage. Action: draft a 4-column sheet, spend category, monthly outlay, strategic ROI score, defer/cut decision, and execute reductions that do not erode mitigation credibility or operational continuity. Preserve optionality early. Think of rehabilitation optics as sequenced proof layers: internal acknowledgement, structured intervention, third-party validation, sustained continuation. Random charitable gestures look transactional. Sustained curriculum participation signals internalized change trajectory. Design a timeline infographic for the court memo and selective public release. Mapping. Start dates, frequency, credentialing bodies, measurable outcomes, sessions completed, modules passed, assessments. Integrate forward commitments, post-sentencing. Will continue, X program, weekly, under supervision Y. Pair humility language with verifiable structure. Avoid over-defensive tone that reads as brand repair over genuine accountability. Consistency outranks spectacle. Credibility compounds. Optics shape trust. Action: enumerate current rehabilitation assets. Score each on verifiability, longevity, relevance to harm prevention, then allocate resource to strengthen the weakest quadrant, e.g., independent evaluation if missing. Prepare a concise one-page layered summary for both judicial packet and controlled fan update. Structured transparency wins adoption. What comeback arc statistically sustains longest? Immediate contrition documentary, low-profile creative incubation, or philanthropic immersion pivot. Each path holds distinct credibility latency. Time from sentencing resolution to audience reacceptance threshold. A rapid content drop risks performative backlash if reflective depth appears shallow. A monastic silence invites talent poaching and narrative hijack by speculative commentators. A hybrid strategy, quiet capacity building plus periodic authentic progress windows, often balances control and relevance. Platform algorithm memory decays. Strategic re-entry timing should align with sentiment stabilization indicators. Negative share of voice, 25%. Advocacy cohort reactivation, 15%. Stagger reintroduction assets. Long-form contextual piece. then controlled collaborations, then broader campaign. Phased reintegration preserves momentum. Plan arcs, not stunts. Action. Build a three-path comparison matrix. Path, credibility latency, resource demand, risk of backfire, key gate metric, and select a primary plus contingency route. Rewrite milestone criteria that trigger progression decisions. Architect the return, don't improvise. Surprising truth. Most stakeholders fail not from wrong forecasts, but from forecast fragmentation. Disconnected plans for divergent outcomes. A unified scenario matrix consolidates decision triggers. Build 3 columns: light, probation, minimal custody; moderate, mixed custody plus supervision; heavy, extended custody. For each, liquidity plan adjustments, staff retention scripts, content cadence strategy, rehabilitation communication intervals, partnership reassurance cycles. Link each action row to a measurable trigger: official sentence length, judicial commentary tone, immediate market sentiment spike. Pre-assign owners and deadlines so execution speed isn't lost to post-verdict paralysis. Integrate an early 72-hour sprint checklist focusing on narrative anchoring, stakeholder briefing, and operational continuity. Prepared adaptability reduces shock drag. Readiness is leverage. Action. Draft the matrix today. Run a tabletop simulation walking through each scenario's first 10 critical decisions and capture friction points to refine before sentencing week. Stress test the plan now. So, October 3rd isn't just a calendar square. It's a convergence node where legal calculus, liquidity resilience, partnership attrition curves, and narrative velocity collide. Formal sentencing is only one layer. Invisible financial throttles, platform algorithmic dampening, staff retention strain, and legacy repricing all extend the impact horizon far beyond any stated term. Control comes from structured matrices, cadence discipline, documented rehabilitation, and pre-architected comeback arcs. Miss those, and even a lighter sentence can metastasize into multi-year opportunity decay. Nail them, and even a moderate setback becomes manageable downside bounded by proactive proof cycles. Next up, we'll unpack the 7 hidden stages of post-crisis brand rehabilitation so you can map recovery like a system. Stay locked in, not professional advice. Consult a qualified expert as needed.